All right, welcome to Trader Tuesday, everybody. Glad you're here. I'm glad to be back with you. Use the chat in here in Zoom for the general banter, or if I have a follow-up question or comments, or any of that kind of stuff. And then you'll see there's a Q&A box. We already have 7 questions populated. You guys seem to know what's what. So please use that Q&A box for this time together here, which is mentoring for you, which is like an open Q&A. So we got 9 questions in here so far. First come, first serve. Let's hop into it. If you ask multiple questions, so it looks like Moses asked, about 4. We will do, 1 or 2 of your questions and then move on to someone else. And then if we have time, we'll come back to the rest of yours. Do you consider it a fresh condition shift, all else kept equal, when the price makes a BPB out of QPVA and afterwards make a RPB back in? Is this change from acceptance outside of PVA and then acceptance back inside alone a fresh condition shift for you? So I'm just trying to comprehend this question. I mean, if you're using the term that the acceptance is back inside, then yes, that's all you need. If the acceptance is what drives our read on what the current condition is, and whether it's a fresh shift and all that kind of stuff, whenever there's a shift in the acceptance picture relative to the reference, I would argue that you're being micro with your read. Okay, you included a screenshot, and I'm taking a look at that now. Really, nothing's going on with the S&P quarterly. There's not been enough price or time back up above that reference to really, count it for anything. Today's obviously trying to change that, but that's still just 2 bars. And if you look at the rhythm on that time frame, it's not really nearly enough of a move into that area for that rhythm. Remember, rhythm is a component of acceptance. Nor is it enough time holding above, 38.50. Do you rank scalp trades without hard time frame narrative into A, B, and C? No, I don't. A scalp is a scalp. It's something that's I'm aware that there's different levels of quality of scalps, right? I mean, and that's going to depend on speed of the tape and order flow and all those short-term things that I'm looking at for scalps. But I think different strokes for different folks or whatever. But I think people tend to try to go too far with quantitative ranking of references and quantitative categorization of trades. That's just not how I operate. And I understand that people want to make everything neat and tidy. But this is a very messy discretionary methodology. And so I think it's counterproductive for most people to try to over classify things. What's the most effective way to deliberately practice my narrative reading, ranking, and distilling skills if I'm not profitable yet? I mean, one of the things you want to find out really quickly is what is leading towards the lack of profitability, right? Is it your narrative reading, right? Do you come in each day and you don't have a good enough read on what the market's trying to do. Therefore, you have wrong lines in the sand. You're expressing wrong directional bias. You don't understand where context is shifting, all those kind of things. Or do you have a better grasp on those things and your execution is a problem, your risk is a problem, your mental framework is a problem, leading to some of those execution and risk problems? You really want to dive into where that's coming from. But to answer your question, the way to practice narrative is to practice reading narratives. I mean, what else, right? Scroll a chart back to the pre-market, like, during the time at which you would normally be doing a prep for that session. Don't use any historical bars if you're using Sierra. So don't use a daily chart. Just either ignore that one, so you don't use the yearly or something, which is fine for 99% of days. Or make that, 14, how many minutes in the pit session? 1400. I don't know what it is. Make it an intraday bar type. And then you do it. And then you look at how it played out with the benefit of hindsight. You have nice documentation probably on what you thought about each time frame, how you ranked and distilled different pieces of information, what dissonance you may have kind of chose to ignore and go with some other things that you thought were stronger. And you're going to have some really good, quick feedback on, all right, let's look at how it played out. Where did the market react most strongly from? Where did it hesitate at? Where did it retest? Where did it end up ramping to into the close? What were those destinations that the market told us with the benefit of hindsight that it was really gunning for and doing? Was there a shift in momentum and price expansion if and when there was a contextual shift relative to your prep and hypos and lines in the sand that you came up with and whatnot? So it's really just a matter of getting those repetitions. You don't have to do like market replay to do that. You just have to be very careful that you don't allow yourself to accidentally cheat, right? And then all of a sudden you kind of know what that day did. If you kind of see something that you shouldn't have and you know what that day did, that day's voided, right? You got to go find another one that you can truly be, objective about. Great questions though. All right, let's go on. Christine, could you please review how you use cumulative delta in your trading? Probably not, Christine. I'm trying to incorporate it in my trading, but I don't think I always interpret it correctly. So we have the course for that. We have hours and hours and hours of content for that for you. I can quickly tell you, just like I always say, you've probably heard me say it before. I look at delta, and it's if price is up here and cumulative delta is down here, I look for strength or lack of strength behind the bars, behind the rotations, right? So, I look for things that are outside of normal. First, you have to establish normal, right? Maybe price rotates up and price rotates down. Maybe delta under normal circumstances rotates up and rotates down. Buyers were pushing, more aggressive. That's why delta went up. That's why price went up. Price went down, and the sellers were in control. They were pressing harder. They were hitting more bids. That's normal movement. And then all of a sudden, maybe price, goes back up to this high, and delta does this. Well, guess what? This is a form of weakness, right? Something's out of whack here. Price is all the way back up at the high where it was before, and delta's nowhere close to where this high was. So that's a weakness from the buyers on that rotation. And through the whole NADRO approach, we're getting all the way down to the nitty gritty of order flow. I arrive at one additional piece of information. Yeah, that's weird. Chat is disabled. I don't know. I've never experienced that before, ever. I've been doing webinars on Zoom for years. No clue why it says chat disabled. I was wondering why no one was saying hello. Usually you guys say hello. Anyway, sorry about that. Feel free to use the Q&A more freely to say things. I'll try to monitor it a little more closely. Yeah, and the other form of order flow type of signal is when you have, let's say, um, normal, 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 and all of a sudden price is just kind of drifting higher here, perhaps, and delta's going through the roof, right? Buyers are pressing aggressively, lifting offers aggressively over and over and over and over, and price is not really responding to that, right? We know that there is a passive seller absorbing that aggressive buying, and that can lead to a squeeze of what is now essentially trapped buyers who may want to look for that exit door, and everybody might start running for that exit door, right? Thanks everybody for letting me know about the chat. Marwin says, hello, Merritt. Do you size similarly scalps and position trades? Yeah, I do. I'm confident enough in my scalping and shorter term approach and skills that I use a consistent R value. I don't use a different R value or risk for full narrative trades versus scalps. Full narrative trades are ultimately going to have bigger risk reward just because of the fact that I'm timing those trades the same often. They often have similar risk profile in terms of distance to stops, but a narrative type trade is one where I'm going to be able to leave kind of a core position on and up the ante in terms of the reward side of the equation. Rafi says, apologies that this has already been asked, but did you not post the DMI today because you didn't have much in terms of clarity? That's correct. That's correct. So the S&P, if we kind of go back and look at what I had said and thought over the past few sessions, a couple days ago we were bullish, and then we had like a neutral level, and then I think a bear zone, right? And pre-market was the only time we got that bull zone, and it came up into the open. I forget when and where the opportunities were. I do remember this day started to hold this neutral level, which led to the overnight session, right? Like this, the overnight session. To the tick to that bear zone. From there, I was leaning more bearish. I didn't do a DMI. So this was a DMI. This was the overnight session. This was Twitter commentary. I said stuff like, and we're still looking at this bear zone, right? Like, I forget what happened here. Maybe a rejection overnight. The bears have to be licking their chops, I think is how I put it. But it's one of those things that could take multiple days to play out. I don't have the short-term clarity for you guys for day trades. Here's a few levels of importance. I think, I've been looking at 39.10. I've been looking at 38.85. And those levels have been absolutely great. And I think this was yesterday, right? So yesterday sells off, right? It was actually a very quiet session for a while, right? It kind of hung out in this area, and then the afternoon really broke loose, right? And so that brings us to today. And, what have we done? We've, held low of day from kind of a neutral reference, one structural area. B period breaks into the next structural area, 38.85. This one is what, 68.50. From there, it's really just an uptrend, and then here's 39.10, right, which we get to and kind of hold, and then just recently we've kind of held above that, and that's the most recent move you're here, and that gets us into a whole wide bear zone up here at this point in time. So we were bullish on this day and got nice movement. We got into the bear zone, rejected it, got follow through to the downside. But as we talked about, I don't have that clarity. This thing, I also said it could go wick the June and July swing highs, right? So that would put us all the way up at what? Anywhere from where we are right now, from the July high, prior July high, or up to 39.50 is kind of that June swing high that I was referencing. So anywhere way up into here, 39.50 plus is this bear zone. And if you go look a couple days ago at what I said on Twitter, it could take days to play out. I think you're either long from the lows and holding, or you're flat into this bear zone, or you're actually looking to get short. But the whole thing, if the short is going to work out, could take days, and we could go wick higher. So nothing has changed for me from when I made that initial DMI, when I made the follow-up commentary on Twitter yesterday, and then no comment from me today, because nothing's different. So anyways, hope that was helpful. Where could I find the DMI? So we post the DMI on Twitter. We always post the DMI on our community site in our DMI section for people who are there. It's free to sign up and make sure that you always get those and get a notification when they're posted. Again, you can follow Apteros Trading on Twitter if you don't know that. All right, we got about 9 minutes here, guys. Any more questions? I guess we can go back to some of Moses' questions. How did you program your keyboard shortcuts for buying, selling contracts, and choosing lot size? Real quickly, you can listen to the recording if you can't follow it. The control on the left-hand side control with my left hand is the kind of engage or disengage, being able to then use hotkeys with my right hand. It's all on the numpad of the keyboard. So I have 6 order quantities, 1, 2, 3, 4, 5, 6 on the numpad. I have flatten and cancel all, which is the numpad period. And again, all these are control plus the numpad, right? The 0 is to toggle on or off attached bracket orders to any new orders that go in. The plus is buy market, the minus is sell market, the backslash or forward slash, whatever you call it, is cancel all orders. And that's pretty much it. If I'm going to come in and place a bracket order around an existing naked position, if I'm going to come in and place any limit orders as take profits rather than banging out with market orders as I usually do, then I use chart trading, and I actually go to the mouse and I write, I get my crosshair on the price level that I want, and I right click, and I'll just hit, my quantity button's already set, right? And then I just right click and hit buy limit or sell limit. It's extremely rare that I use a buy or sell stop as an entry tactic or something like that. Usually I'm just manual with market orders. You said once in a rotational environment on a lower extreme on the weekly or monthly, it doesn't matter where the price is, 1, 1.5, 2. It is all lower extreme and thus bullish. The time frame does not automatically change to IB down just because the price is below the -1. End quote. That's correct. But if that's the case, what must happen that a rotational market becomes imbalanced down or up if there is if a simple hold beyond the -1 or +1 in this case is not enough? It goes back to rhythm and acceptance, my friend. It's the same conversation we talked about before. Do you get enough distance away? Do you get a full rotation? So a lot of times it's actually the counter rotation, not the initial probe, that will put us into kind of more of an imbalanced state. So if here's a reference and here is our rhythm, right? We could still say that this is rotational, right? And still be looking to get long from this area, barring the narrative, right? However, if this is a breakdown and this is something that's bearish narrative wise, we're not talking DVA here, even though this is a DVA reference. DVA is just a tool to access narrative ideas. We're not sitting around trying to figure out whether DVA tells us we need to be long or short. We know whether we want to be long or short, and then we're using DVA effectively. So someone who was bullish from this area could get long from here, and that's a perfectly acceptable trade. But now here's that counter rotation that I told you about. What if all of a sudden it puts in a really nice rotation and starts to give a turn there? Do you think someone who's bearish can short from here? And the answer is yes. So within the same sequence, different timing based on our use of rhythm and whatnot, someone could be long from a lower extreme of DVA and somebody could short an attempt at an imbalance. There is no magic with DVA that tells you what to do. You can use DVA effectively to get into what narrative tells you to do. But real quick, so this would be a full rotation. Now we have 100% of a normal rhythm below the 1. So you could say it's imbalanced down if you want to, right? Another way of that would be just kind of like a flag, like time acceptance, even if you didn't get the distance. Another way would be if you, within this, again, this is the rhythm, all of a sudden you get this. And now all of a sudden we've got, wow, this is almost like 2 rotations that are mostly below. And so you could say, okay, I'm calling this imbalance down. But the fact is that as a NADRO trader, if you still want to fade that extreme right there until we go confirmed IB down with the rotation that actually holds a rejection from outside of DVA, you can still do that. DVA is nothing but a loose framework, and everybody wants to make it this magic indicator that tells them what to do. It's just not. Graham says, how do you deal with profiles that are quite large, like in Q, or do you still use 3 ticks per block or increase to 5 so you can compress the profile? Yeah, so for my NQ profile, what do I have? 4.5 points. So what is that? I can't ever remember how many ticks NQ is. So I have it set to 18 ticks. 18. Tanush says, hey, Merritt, this is more of a comment rather than a question. The video you posted on grading narrative has been a huge game changer for me. As you know, I've been focused on really strong narratives. That's helped me get better at narrative read selectivity. Something was still off my development. Since that video, I've been more open to lesser narrative ideas, and my process goal has been to take more B trades. I've noticed this has actually helped me with attachment to trade ideas and losses. As long as I'm objective, recognize there are lesser trades than I don't have as attachment as much before. I'm still working through the details, but as far as mental framework, it's been helpful. So thank you once again. Yeah, that's cool, Tanush. I think that's part of natural progression as someone trading within the NADRO space. I really do. I think, when we start out along this, learning curve, first be unoriginal. I think that's important. Don't bring in all your prior knowledge and all your, if you're great at fib retracements or bullcrap Elliott waves or whatever, let's leave that aside for a moment and let's learn NADRO. Let's be unoriginal for a while. And that leads to kind of the second thing that I talk about a lot, which is first do the simple well, right? Let's do the simple well. And I think this doing the simple well, part of that is, to your point, let's identify what the best opportunities NADRO has to offer look like, and let's trade those. And let's not scalp, and let's not do a bunch of other crap, and let's not get too nitty gritty with order flow details, and let's just do the simple well. Let's read the narrative. Let's time the trade with the best we can with a loose use of DVA as an intraday guide to help us do that. So let's do the simple well. Let's not be out of rhythm in our entries. Let's manage a trade according to however simple of a process as possible. Right? And from there, we're out of time here. I do have to go. But from there, I think a lot of the development and a lot of the places that ultimately people get to at the higher levels of NADRO trading is more about making compromise, handling dissonance, right? So you have a really A+ trade. Maybe you compromise something in terms of the DVA location, right? Maybe you do take that VWAP location. Maybe you do, as some people learn to, go against established imbalances when they have certain criteria that are met, including the narrative idea that says this makes sense to try this aggressive behavior, right? You know when to be aggressive versus not. It's very important. Handling dissonance is something that kind of ties in with what you said, because I think by definition, a lot of B or C trades, rather than just the straightforward A trades, there's a reason they're not an A trade. We've either left the location, right? The ideal trade location. And now it's more of a continuation play. And now it's kind of in open space and on some time frames, and we don't have as much to lean on at our back. Or there's actually dissonance that's now a part of a narrative, right? Maybe it is ideal trade location on some time frames. Maybe there's a little bit of dissonance on others, and we're making a choice to take that trade despite not everything being perfect, right? That's kind of tied in with making compromises, handling dissonance. And there's a whole lot more trade opportunities for a well-rounded NADRO trader than the NADRO trader that's trying to do it purely by the book and purely the simple and purely the A+ type stuff, right? There's more opportunities than just those A trades. I usually have trades even when I don't have a DMI, right? I will go all the way down that spectrum to where I'm now deploying almost no narrative skills, and it's almost all short-term type stuff, right? It's still, I think, a lot of narrative skills, but I move it towards shorter and shorter term references, right? I may not have a normal standard, long-term VWAP, CVA type narrative. I will end up with prior value, overnight balance, things like that. Maybe even just pushing for one reference destination, on the weekly or something to kind of get moved into, or a poor high or poor low, or an area that needs excess. I kind of line all those things up and and end up going again with rhythm and DVA and order flow to kind of just align me for a very short-term target that I can see the market's trying to get to, despite the lack of clarity, bigger picture. So that's even past, taking B trades. That's moving past that along, the spectrum to pure scalps, right? Which you're still applying a lot of the same auction market theory, a lot of the same tools and tactics. It's just shorter term without the traditional narrative stuff being at your back. And real quickly, following up on those TPO tick sizes, I like to be able to see the last handful of days on the page with being able to see very clearly each letter or block. If you do that formula, you will arrive at something close to what I have. If you have too small of a tick size, right? Let's say you have it 1 tick size. Well, you could scrunch up your y-axis and get the past 5-6 days in view, but you will not be able to see all the letters not touching each other. They're all going to be scrunched and it's going to be a mess, right? So first get your y-axis scale set, and don't have it to auto scale. Make it like fixed scale, fixed range. Don't recenter on scroll, nothing. And then from there, dial in the tick size, slowly increasing it until you can really get those letters, blocks, whatever you're using, nice and individual clarity. You can toy around with how big you need those to be, right? You can leave it at auto sizing, or you can set it to something like 6 or 8. It's going to depend on your monitor and your eyes and what works for you. Yeah, we definitely swing trade NADRO for sure. NADRO's as well suited for swing trading as it is anything else. All right, everybody, I got to run. Thanks for hanging out on Tuesday. Thanks for bringing the great questions, and we'll see y'all next week. Bye.